Yes, Sunday. What's up, everybody? Sunday evening edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had an amazing weekend, and more importantly, a great Mother's Day. I actually spent the day with my beautiful wife, the mother of my 3 wonderful children, and so we normally do the Daily Market Commentary on Monday morning because we have a live trade room on Sunday night, but we're delaying the live trade room by an evening so I can spend some time with the family, and we will do our live trade room tomorrow, and so we're getting an early edition of the Daily Market Commentary. I will not have a Daily Market Commentary out tomorrow morning. This will be the one for tonight as well as tomorrow. All right, let's go ahead and dive in. So the S&P this evening, we are up about 8.5 points, a little bit of a gap up right into a supply area. So we can see this little drop base, very strong move away. Now this is, in the context of a bigger picture upward trend, and our bigger picture upward trend, our 4-hour trend is to the upside, coming into 4-hour supply. But let's talk about this 4-hour supply. So this 4-hour supply, which I'm speaking of right here, is a fresh area, meaning this is the first time we've returned to this area. But there's 2 things that really bother me about shorting at this area. Number one is that I have some basing right here just before the area, which makes it that much weaker. The second thing that I dislike about the area is that it's a bit of a retest of this area over here to the left. And so with that, it makes me very cautious about getting into this hourly supply zone. And so I think that probably is not going to make sense for most people when you're looking at one of these positions. So our Friday trade, we got a little bit of a move back in, about a 2-to-1 move away, and then it came a little bit under. So it could have been a stop out for you depending on your trade style, but I think that there is still going to be an opportunity for a retracement and a pullback. So if I slide this to the 15-minute chart, this was the opening of today. Now we actually gapped down to start our session and immediately traded higher. So when I look at that's a sometimes you'd say gap and go, right? Meaning if I get lower than the first candle's low, but we gapped down and then traded into this little wick over wick area here. I love wick over wick levels. So now what I'm going to do is put a little area right in here on the 15-minute time period. We could get a retest of this area in the overnight. Now, one of the things I would also say is tomorrow morning when you wake up, take a look at this level for a potential reversal right around the 2 a.m. So keep an eye on whatever our 2 a.m. reversal is tomorrow morning to see where might we get another turning point and another opportunity to get long, because that's really what we're looking for right now, are long opportunities. Now, we may get a bit of a pullback, and there's some short-term trade there for the overnight, but right now, that's the area that I'm looking for the reversal. In the NQ, we are actually coming up to what was our 4-hour potential breakout level. We've talked about this level because we had a little bit of basing here in the past. We've come up to it again. We're basing in front of it. We had a lot of people take some of our trades from last week on some of these NQ breakouts and reversals, and they were very effective. Now, we did get one little trade into this level last week on Friday, and we did get a nice little 2-to-1, almost a 3-to-1 move out of that level before price came back down into it and broke through it. So now looking at this, the same kind of 15-minute area exists right here in the NQ as it does in the ES. Now I would say in the overnight Globex session, the NQ is probably going to be a better trade opportunity than the ES, just simply because it has an overall higher relative strength to one another. The NQ is slightly higher when it comes to a relative strength picture. So there's our NQ level. Now, if we continue to get basing below this 92.75, I think you do still have an upside breakout potential. And we can see that on the daily chart, the NQ is within, let me see here, we're within, from current price to the high, we're within about 5% of getting back to our all-time highs in the Nasdaq. So the market has been very resilient off of those monthly demand areas, continuing its rally higher. If we get a bit of a pullback over the next couple of days, I would look to this area here as probably the most likely place to get long again, which is right around the 9,000 area. So we'll keep an eye on that one throughout our daily commentaries throughout the week. Let's take a look real quick. I know I don't normally look at the Russell in the daily market commentary, but I do want to take a look at the Russell today. Let me get rid of some of these older lines so that I can give you some more fresh analysis. We normally look at the Russell in the live trade rooms, but not necessarily in the daily market commentary. So let me remove some of those areas and pull up the 4-hour rut. So in our 4-hour rut, now the Russell did have a pretty big sell-off. And it's been climbing back. It's not quite to that high where the other markets are. So you do technically still have an upward trend. But when looking at this one, I can see that we have the hourly supply is very clean up here. So if you are more of a bear and you do want to try a bearish trade, I think that the Russell is your opportunity on the bearish side. And it's this level right up in here. If you're more of a bear. I am not a perma bear. I'm going to stick to what the big picture trend is telling me, and right now it's giving me more of a bullish sentiment. Let's move over and take a look at crude oil. So in crude, on our front month contract, very sideways throughout the last week, hovering around 24. I've been analyzing the September contract over the last couple of days, still very sideways. And so a lot of people are looking at that as an iron condor opportunity. And an iron condor opportunity would be to find a range where it can stay. So I think that that's not a bad idea, so long as you keep your wings outside of some of these areas of supply and demand. And you keep your condor wide enough so that you can be safe. Right now, we're in between an area of resistance and support. I wouldn't call those supply and demand, and the reason for that is because if you call this a supply zone, well, it's a retest of this area here. If you call this a demand zone, it's a retest of this area here. I would call more of those of support and resistance at this point, which are still banding the price between 27.30 and 30.05. And so if you wanted to go outside of there for a condor, you're probably okay, but that's where I would look for my reversals. Next, looking at gold. So in our gold markets, now we did have this gold trade set up last week on this wick over wick. Not the greatest level, as price just blew right through that area, rallied back up, and then it's been selling off ever since. Now we are coming into this area down here. When I look at the 4-hour chart, my 4-hour chart is very sideways as well. So with that sideways price action, I'm a little bit hesitant to take that level. Get this back to. I went a little too close. There we go. Let me just reset this one. With that chart being a 4-hour level, it gives me a little bit more concern about coming back into this hourly trade. Now, my other problem with coming into this hourly level is that we're basing sideways in front of this zone, and sideways basing in front of the zone reduces the probability of success. So I think that I'd be more apt to look for a potential breakdown, although that trade isn't set up yet either. So let's revisit this one tomorrow morning after we see what the London market does. All right, moving over to bonds and currencies. So in our ZN, we did finally last week get some movement in our bond markets, and we caught a nice demand zone trade off the live trade room. The second time back into the level, we were not as healthily rewarded as price came really close to the level and then moved away, which caused us to move us to a confirmation. And then we came into the level, gave us a little bounce out, and then just popped right through for a small stop out. So that was unfortunately a reversal trade that didn't hold true. Now on our 4-hour chart, we are still in a sideways price movement. I thought we were going to get a better move away from it. We finally touched, we had a little 15-minute level, this one here that we bounced down into and moved away. But we're still in our 4-hour trend. So you've got a little bit of an hourly level here to lean on if we come back into there, but it's a little wick over wick above just this little pivot area, so it's not too bad. We do have a little supply area up here that I think is maybe worth visiting. If price comes into here, I think this supply area that's right there, that's an unbalanced, actually I'll take this one that's a little higher. It's more of a balanced wick over wick right here, and probably a slightly better time of day that might be worth reviewing later. Looking at the Aussie, so our Aussie position, we had an Aussie demand area, so price came into really close to this level, and we've rallied away from there. This level, I think, still is pretty strong. I'm going to put a potential breakout line right in here. If price breaks out above there, I think you've got a breakout trade and a breakout candidate. In the euro, we had a euro setup here. We got one touch, two touch, and then we got no basing. So this is not a false breakout. Those of you that trade breakout trades understand that this is not a false breakout because we did not get basing before the level. That is the key. Got to follow the rules, and if the rules say there's no basing, bada bing, there's no basing. So when I'm looking at this, I need to see basing before the zone. Now we did get a nice level off of this little zone right here, which is what caused this big price rally up. I will say that you could get a move down from here actually if we get basing below this area. On a 4-hour chart, now the reason we're a little sideways is because the dollar is also a little sideways, so our currencies are a little bit indecisive in general. Looking at the Canadian dollar, so our Canadian dollar, our upside momentum is starting to wane as we're coming into this area of supply up above. So when I move this over to, say, the 15-minute chart, let's go back a little bit more in time. So on a 15-minute time period, if I look further to the left, you do have a lot of this area here. My fear with that is that it's very, very, we'll call it wicky. There's lots of wicks in here that I need to pay attention to. So, but it is still enough for me to say, okay, well, there's some supply here. Now that supply there makes a breakout right here less likely. So I would say that your better probability now is to look for a decent reversal trade back to a quality area, and I think that you've got a zone back in here. This pivot is probably your best level, but none of these are going to be extremely quality zones, so it may just be better off holding off on these positions. All right, last couple of markets that we're looking at. So moving over to Great British Pound as well as the Japanese yen. And we'll also take a look at natural gas, and I'm going to look at soy this evening as well. We've got a number of people that trade soy, so I'll put soy into my list of things that I'm going to look at. So starting first with natural gas, we had a really nice little demand area on the gap fill level from last week. Price came into the level. Now, unfortunately, we didn't get a huge move away. It was a perfectly positioned level. We got a nice touch close to it. We came into it again, and then it just kind of fell through. Now, this sets up for a really nice breakdown. So anybody who caught that breakdown trade did very well with that position. Now, we are looking, I think, at another potential breakdown below this area right here, this 813 area. If I look at the 4-hour chart, not the 30-minute, if I look at the 4-hour chart, we see that our 4-hour trend is most considerably down, and so we do have a little wick over wick area down here to contend with, but I think that our big picture trend is actually going to continue to drive us down into this 1.7 area. Looking at the Great British Pound, so in our Great British Pound position, we had a really nice reversal off of this last week. For those of you that were able to catch that one, you got a really nice move. However, we then converted that to a confirmation entry, and this is why we do confirmation entries. So no entry on that trade as it popped right through it, but it did set up this big expanded range candle, which we anticipate would eventually get retraced, and the origin of that move does become a demand area. So look for a potential reversal in that zone. Japanese yen really coming down off of this high down up here. So I'm going to look for the most obvious level right now, although it might be a bit too obvious for some people's likings. I'm actually okay with it right in here. Now, the only downside to this is the time of day. Now, this is the market close time of day as well as Globex open, so I think you may be all right with that level. And then soybeans. I'm going to look at soy for a moment because we've been looking at soy in our live trade room a lot. Some of our best members and best traders are using soy. And so in looking at soy, we are seeing that on our 4-hour chart, we've now created an upward trend. On our 1-hour chart, we were basing here before the level, which takes this level completely out of play. And now we've gapped up on our weekend move. We've gapped up. We've gapped up in an upward trending direction. So this does set up for a gap and go play. If we get higher than the first candle's high, stop goes below the first candle's low, it does set up for a potential gap and go play. So those are our levels for this evening. Like I said, I know we don't normally do Sunday evening DMCs, but because of spending some time with the family on a Mother's Day, we are doing a Sunday evening edition. If you guys have any questions at all, please send us an email, support@tradersarmy.com. I appreciate you so much, and I will talk to you all soon. Have a great day. See ya.